Hi and welcome back to Cheeky Crypto. My name is Nick and it's fantastic to have you back and join us for another video. It was great to see so many familiar faces and new faces down in our meetup that we had down in Soho in London yesterday. We had project teams from 𝗕𝗘𝗪𝗔𝗥𝗘, from 𝗕𝗙𝗪, and a few others as well, as some YouTubers such as 𝗕𝗘𝗪𝗀𝗡 and a few others as well. So it's great to have so many like-minded individuals all in one place to talk crypto and just have a really good catch up. So appreciate everyone who spent the time to come down and meet us down in Soho yesterday, but it's good to be back in the studio with a higher quality microphone, higher quality camera, and to start, producing some more content for you guys so you can know what's going on in the space. And that brings me to today's video, right? We're going to be talking about Cardano as per the title and thumbnail of this video, where we are going to be talking about the delay with the Vasil hard fork and, why I think this is a positive thing and not a negative thing. And I'm going to go through some of the issues that are going on here with that. Then obviously we're going to jump into the technicals. We're going to see what's going on with the price action. Do we see the price continuing to move up, or is there a correction coming down the pipeline? So as I get into this video, if you find it useful and informative, hit the like button. I really do appreciate that. If you happen to be new to the channel, then why not go ahead and subscribe, tap the bell, select all notifications, and in doing so, you will be kept up to date with everything that we do here at Cheeky Crypto. Now, in the description down below, you're going to find links to our Discord server. Check it out. It's completely free. And, I don't think you'll be disappointed by what you find down there. So why not go ahead and check it out? Okay, guys, let's get started. Let's jump right down into this. We're going to start things off with the Cardano Vasil hard fork news, right? So Cointelegraph, usually these guys are relatively negative for Cardano, and you take them with a pinch of salt here and there. So I'm going to cherry pick out of there the quotes, and we won't necessarily take their narratives, okay? But we'll skim through some of the key points on this one. So essentially, yes, we have another kind of delay here for the Cardano Vasil hard fork for several weeks, right? So straight away, the title isn't necessarily giving us a lot of confidence, but I'm going to go through why I think this is good news, okay? So after failing to go live last month, Cardano was delayed again. So basically, we had a series of delays here, and you can understand why people are frustrated by this. But essentially, I see it as a positive, right? Yes, we delayed from June to July, okay, and this was to give more time for the exchanges to get on board, right? They were targeting, I think it was 80% of the total liquidity to be on the new hard fork, right? To be on Vasil's upgrade. So this is actually really important, because if you don't have that kind of threshold, then you're going to basically affect retail investors further down the line, right? So one of the key things here that we have to understand, let me move a little bit closer to this, right? So one of the things that we have to understand here is this isn't negative in any way. This is actually more positive, because we want to make sure that we hit these right requirements so that when the product goes to launch, or this upgrade launches, that we don't have any issues, right? And this is the main thing that you see with other chains that maybe just rush this process. Take Solana, for example, that has a lot of downtime, a lot of issues, too many, right, for really and realistically. And if they spent more time in the testnet, those issues could have been resolved a lot earlier, right? Rather than just rushing a product to market because you're in a bull cycle. Maybe you got some VC capitalists, really hammering you, trying to say you gotta get this live, right? Now, I don't want to pick on Solana. There's many other issues that we had with Ethereum in the early days, kind of rushed to market, and you had lots of people lose a lot of money because of issues in the code. So the way that I see this is that, yes, there's more time required for the exchanges, for the dApp developers, for the API developers, etc., to get on board with the upgrade. But at the same time as giving them time to, implement this upgrade, there's also more time in the testnet to find any additional bugs. So this to me seems more of a positive than a negative. The upgrade being where it is right now is actually means very little to the kind of the overall landscape of crypto investors, as in just speculating on price, because we're already in a bear market, and I believe that Cardano hasn't reached its bottom just yet. So actually delaying this thing until we actually have a really good bullish movement in the market could be actually really beneficial for Cardano long term. So seeing this delay actually lines up quite nicely. If we can get this delay to maybe, or the launch to kind of coincide with late September, I think Cardano would be in a much stronger position financially, at least from a retail investor perspective. So I don't necessarily think this is a negative, but I think there are going to be people who will be spinning it as such. But let's go ahead and take some quotes from here. So we've got Kevin Hammond, who is the technical manager for IOG. This is Input Output Global, which is obviously the organization responsible for Cardano's research and development, right? Charles Hoskinson being the CEO of IOG. So Kevin here has a quote, but we won't go into all of it in details. But obviously from here, there could be a few more weeks before we go to the actual Vasil hard fork. This is incredibly important. All the users must be ready to progress through the hard fork to ensure smooth process. Now, essentially, what we're talking about here is that all the parties, so think of these as third parties, including exchanges and API developers, etc., are ready. Okay, they need to be ready for this upgrade. And like I said, they were targeting, I think it was 80%. It might have been higher than that in terms of all the liquidity. So in total liquidity, exchanges are going to be, centralized exchanges are going to be huge parts of that, right? And then obviously decentralized exchanges and so forth. So from a liquidity point of view, you're going to want to make sure that you have a large amount of that liquidity captured within the upgrade to make it more successful and kind of remove any potential errors and issues for users. So this is really incredibly important. The question I have is, when you read this and you understand what is being said here, that it basically is to ensure that all the parties have the time required. This to me tells me that essentially it's not necessarily that Cardano aren't ready to go, it's more that the third parties are not ready to go. So I think this is less of a Cardano issue and more of a community and business issue. Okay, there's a lot of things going on in the crypto space, outside of the crypto space, that could be factors for this delay. It doesn't necessarily mean that Cardano are, a shit chain, a shit coin, a ghost chain, nothing built on it, no smart contract, none of that nonsense, all that thud, all that inaccurate information that is out there. There's nothing to do with that, in my opinion here. Reading the words that are being spoken, it is more about allowing us to have the time on the testnet to really make sure we test it thoroughly, but also give all of those third-party applications or developers time to actually implement the upgrade so that you can capture most of that liquidity and you don't have issues further down the line. You don't end up with Solana-based issues. You don't end up with Ethereum-based issues, the issues that you had in the early days, for example. So to me, this is actually really positive, and I know that people will be taking it as a negative, Cardano and all the other kind of nonsense that you hear in the space, but essentially, to me, this is a positive and not a negative, and that's how I'm perceiving it to be, okay? Because I do think that if we can time this right, the market could be really favorable to Cardano. And on that note, guys, we're going to jump on down into the charts and take a look at the technical analysis using Elliott wave theory for Cardano's ADA. So here we are. This is Cardano paired up with USDT on the hourly chart, and Binance is the data source. Now, essentially here we've got nothing but corrective moves. This is what I've been talking about for a while. We have these kind of really big corrections, and this looks like a really strange kind of sideways trade going on here. And then it occurred to me when I zoomed out a little bit, we could actually articulate this as a 5-wave drop from this X high down here, which means we might end up with a 5-3-5 structure. So let's go ahead, go back to our school days here, and we'll just draw these out for a second, okay? So if we've got a 5-wave move going down like this, we have two options, okay? We have a 5-wave structure dropping down, then our minimum expectation would be a 3-wave structure upwards, okay? And this will have no rhythm or rules. We'll assume 50% of this retracement, okay? So if this is 100% of the move, these 5 waves, then the 3 waves would be approximately 50% of that, okay? But it would be unpredictable. It could be short, it could be longer, and we wouldn't be able to predict the B wave per se. And then, of course, once you have that B wave done and it's completed, and you can see this through technicals, you'll be able to then plot out your next 5 waves going down. And this is what we call a zigzag, or a 5-3-5 structure. Now this essentially is also the technical term of A, B, and C. Okay, so it's got kind of 3 names. We call it a zigzag, a common name. We call it ABC, corrective structure, or a 5-3-5. They're all the same thing. Okay, so when we say we've got a 5-wave drop coming down, and then we're looking at that inside of our corrective structure overall, let me actually just clear those off. Let me come back up to our chart here. Let me show you this, right? I was measuring this out earlier. This is our wave 1 drop here. This is our wave 2 up here. This is a pretty standard kind of retracement. We then pull back down, not to this point here, but to this one, because this is actually overlap right inside here, if we were to consider that as the bounce and this as the fifth, then essentially that would be more of a leading diagonal. This is what I was looking at prior. But actually, when reflection, when I was zooming out, this would be our third wave, okay, as in that's a fourth wave move upwards and a little wave 2 here, no crossover, perfect wave 3, up in 3-wave structure here, ABC structure, and then we drop down into that final fifth wave. Now, that fifth wave isn't really meeting a requirement of the fifth wave in the sense that it hits the 1.236 or that it has a 5-wave structured move. So it could still be a diagonal, but we don't have the overlap between wave 1 and wave 4, but it does fit quite nicely. And then we get to this little section just going on right here. We can actually see a pretty solid move upwards, a little bit of a retracement, finding support at 45.36, and now we're moving on up. And I've actually drawn this range out here because there's a few key areas for us, okay? Now here we actually have this between 54.87 and 61.55, right? So this little yellow box area. This basically, let me draw the fib on, right? So if we grab hold of this high point just up here, let me see if I can get it. I'm going to have to zoom in. Let me just zoom in on this little section. Actually, it might make more sense. So we're going to take this little section here. We're going to take this high point right at the top, and then we're going to take this low point just down here, okay? This is basically measuring 100%. So from 0 to 1 is 100%. So this entire move up here. This is one wave in itself. We can see that there's movements inside it, but it's pretty clear it goes in one direction on a macro scale, okay? And when we take this, and we can see we have a 3-wave drop down. So I'm going to grab a WXY here, and we're just going to go WXY. We can see we have a pretty clear 3-wave structure, and there's a little bit of fluctuations in the middle there, but you know, it's pretty much a 3-wave structure. So we know that this is a bottom point, and we started to move back up again. So with this 100% move, we can grab it and we can move it over to this low point of our B wave, if you will, because if we think of this as a macro, this is an A wave, this is our B wave, which is the unpredictable one, but you would expect at least 50% of this move, typically, but you know, there's no guarantee of that. And then we move on up into a C wave higher, okay? So what you've got here is basically this ABC structure, that zigzag. It might not be a complete zigzag, but this does look like we could argue there's 5 waves inside our A wave, and we'll be looking for 5 waves inside of our C wave, right? So basically 535 zigzag ABC. It doesn't have to be that. It could also be articulated as just a WXY, which is basically just a 3-wave structural moves. But as you can see, there's I've marked up this yellow box area with the higher range being this 61.55 when I drew it more accurately than I just did here. So that's our upper limit. I don't really estimate us going up higher than that, although it is possible that we have a double top right here at 68.93. I think that's less likely. So what else have I drawn up here? And why have we got this broad range? Well, we've got this broad range because the minimum requirement of our C wave would just be to meet our top of our A wave. There's no guarantee that we move up higher than this. It's just what is probable. You can already see in the last hour, we've just broken through this area of resistance right here. So we've already met the minimum requirement of a C wave. We don't have to push up higher, but we can of course see that this was our 618 area. So getting rejected from this area here would be pretty negative for Cardano. So getting a rejection from our 618 will be interesting. Moving up though, we have a 786, and this is where we'd want to see a close. If we can close the daily above 57.58, that could potentially mean that we can move up higher towards our 61.58 target, and maybe even up into that double higher area of the double top, right? Essentially though, I'm not seeing any reason to think that we are going to go past this area, and that would basically create invalidation of our bigger macro structures to the downside. We cannot go higher than here, otherwise our 5-wave structured move down is not a 5-wave structured move down within any bigger structure overall. So that sounds really complicated, but let me go back to my drawing board down here and show you what I mean. We have 5 waves coming down like this, right? And what I'm saying is we have a 3-wave move going up like this, and in here we might find ourselves with like a little mini kind of, let me actually draw that out properly, go for that 4th wave there. Okay, you have like 5 waves just going up there, and then we might end up with, you know, 5 more waves kind of coming up in here. Let me draw that out properly, just like so. Okay, so that becomes like a little kind of zigzag in itself, of which we're actually inside a macro zigzag pattern like this, right? But obviously invalidation would be set up here. We wouldn't be allowed to cross the origin level. So as we start to track this move upwards, we know that that upper level on our structure would basically invalidate this particular area. It would basically mean that these 5 waves wouldn't happen. We could just remove them. Okay, so when we start thinking about our minimum requirements, what we're looking at here is, well, we've got a 5-wave drop down, and as per the rules, we would expect 3 waves up and 5 waves down as a minimum. Okay, now obviously things don't always play out exactly like that, but those are the expectations until proven otherwise, as in that is going to happen unless we can invalidate it and prevent it from happening. And the invalidation would be set by crossing the origin level. So hopefully that makes sense. And let me just delete this and come back up into the chart here. So what I'm saying is that we have our 5-wave drop here, we have our 3-wave going up, but if we do go up higher than 68.93, that prevents us from moving down within this structure. It doesn't prevent us moving down total, it just means that we have to look for something else or another reason to move down. It is not what we are currently seeing, okay? It also does not mean that we are bullish to the upside, because again, a 3-wave structure is always deemed short-term unless it turns into a 5-wave structure, okay? And we promote a 3-wave structure into a 5-wave structure when we hit a 1.618. So in this case, we'll be looking for 74.55 and would look to go up higher than this, as this area here would indicate that we are now impulsive, meaning that it's not 3 waves, it's 5 waves, okay? And that is a trend. So if we do have that, then essentially we've started a trend from down here at 40.19, and essentially we can then say, yeah, there's no more lower lows, and we can be confident in the move to the upside. That being said, though, we wouldn't want to necessarily buy that confirmation of 1.618. We would want to look for an 88% retracement once you finish your motive waves upwards. And let me show you what that looks like before I finish this video off. So essentially, if we have a trend that goes up like this, okay, specifically on this hourly chart, this micro level, what we're actually saying here is that all of this 5-wave structure on a slightly larger time frame would be deemed as a wave 1, meaning that we would be looking for an 80 or 50 to 88% retracement within a wave 2, and then we go up into another 1.618 move on a macro scale, which again would be a very, very impulsive structure. So what I'm saying is basically, whether or not we've had the bottom, it doesn't matter. What we're looking for is the trend structure, and then we're looking for that retracement, and then we're kind of like saying this is probably the area that I would want to kind of jump into the market, because this has given me the most amount of room to grow in value and have the confidence that we are not coming down lower than our origin level, meaning that our risk is just this little area here rather than this entire area here. Okay, so really important that we have proper risk management when it comes to kind of trading the crypto space. It's an unregulated space. This will basically mean that it can be manipulated without fear of prosecution later. Now, don't get me wrong, there are going to be pockets of areas in time that I think will be heavily regulated, and even some of the history might be prosecuted for it. But essentially here, what I'm talking about is keeping us within this structure so that we can accumulate at these lower areas. Now, if we break that structure, then we move on up. And if we do move on up, we don't FOMO, we buy when we have the retracement, because again, that retracement will happen regardless. Now, before I try to finish this video off, we want to talk about the probabilities of things. Okay, so obviously we have our structures here, and our C wave could potentially be done anywhere around here. And as you can see, we're struggling around this 618 area on the fib levels, which is a key area of resistance, as people are going to resonate really well with it. Now we take a look at the fibs. We're overbought on the hourly, so do expect some volatile movements just around here, maybe rejection on the short time frame. On the 4 hourly, we've got to progress back to the overbought area. So we're indicating that we have a little bit more room to grow, but it's not 100% guaranteed. Okay, on the 8 hour, we're already overbought. On the daily, we're overbought, and on the weekly, we are heading to the overbought area. So essentially, everything here is looking short-term bullish, as in short-term movement upwards, but there's a bigger move to the downside coming. And now that could be that we hit, an impulsive structure upwards, and then we correct down that 88%, or we lose this structure and we pull back down into new lower lows for Cardano towards our targets, of which for me, I have mapped out at 28 and 34 cents, somewhere in this little yellow box area here. This is a key area personally, as it's a key area of resistance and support in Cardano's history. Now, as we kind of move down, our 1-to-1 ratio, or what Elliott Wave theory is telling us is the most common area for retracement of where we're going to end up, is at 22.23. Okay, so again, I would be looking at, this area here. I'm not really caring too much about the bottom. If we go down a little bit lower, that's okay. 28 to 34, in my opinion, is a nice place to kind of be. And I've got limited downside at that point, right? I can see here, let me just remove that and bring this in. If we were to say 28 cent, I can say, okay, well, I've got 21%, and Elliott Wave theory is kind of saying that's the most common. So I might be at 20%, a slightly higher purchase price than, maybe I might want to kind of maximize things. But that might be a really interesting spot to kind of be. But again, what we might want to do as a good strategy is wait for that trend line going up, right? That trend structure, and then basically buy the retracement, which might take us back down into this area. Okay, so it's not like you come down here and that's it, you're never coming back down again. You know, you should be looking for this structure upwards. You buy the retracement, you might just be a little bit higher. That's okay. You know, you've got this right structure, and then you can go ahead and ride this up in a really strong way afterwards. Okay, so essentially for me, that's kind of where it is. But obviously, I'm not a financial advisor. I cannot give you financial advice. All I can do is give you my thoughts and opinions on what Elliott wave theory is indicating within the charts. If you found this useful and informative, hit the like button. I really do appreciate that. If you happen to be new to the channel, then why not go ahead and subscribe, tap the bell, select all notifications, and in doing so, you will be kept up to date with absolutely everything that we do here at Cheeky Crypto. With all that said, done and out of the way, I hope everyone has a fantastic day, and I'll catch you all in the next one.